Here's the problem. Each year, more than 1.5 million American households must borrow from their home equity and retirement savings to pay for expenses related to critical illness that are not covered by their health insurance, according to a Howard University study. 700,000 families and individuals of all ages are forced into bankruptcy by these unexpected costs. For example, according to the American Cancer Society, 3,000 people are diagnosed with cancer every day, but as much as 60% of cancer-related expenses are typically not covered by ordinary health insurance, including many experimental treatments or medical procedures. What more, health insurances do not cover extended covalances or home nursing care or assistance with housekeeping, cooking, cleaning, and childcare, or the loss of earned income while the patient recuperates from surgery and struggles through chemotherapy or radiation treatment. All these expenses can cost thousands of dollars over months or even years of treatment and recovery. So, what is the solution? $50,000, $100,000, $200,000 or more paid directly to you, tax-free, in addition to any other health insurance coverage received between 20 to 30 days after reporting a doctor's diagnosis that you have any one of several major medical conditions like cancer, heart disease, stroke, kidney failure, blindness, paralysis, even Alzheimer's, and the solution is critical illness insurance. And here's how it works. The lump sum received from critical health insurance is in addition to any other coverage you have or other benefits you might receive, and this can be spent however you choose to pay for medical expenses or non-medical expenses, even if those expenses are not directly related to your illness. For example, if you cannot work during your illness, you can use the money to pay your bills or pay off your home mortgage, your car loans, or your credit cards. Critical illness coverage gives you options that you don't have under your health insurance. Options that can improve the quality of care available to you because critical illness coverage enables you to pay for alternative therapy and in-home nursing or covalence care that are not covered by your insurances or doctors and clinics that are not in your insurance network. Critical illness insurance can prevent you from spending all your savings and keep you from going into debt or bankruptcy. It can keep you from needing to ask family or friends for financial assistance too. Just ask anyone you know who has personally suffered through a critical illness like cancer. Ask them how much of it was covered by their traditional health insurance and how much of a difference $100,000 would have made for their lifestyle during this time. For example, Bob and Sue are in their 40s with 2 teenage sons when Sue was diagnosed with breast cancer in 2014. They both had good insurance policies from their employer, but they also had $100,000 of critical illness insurance, which they used to pay for additional expenses not covered under their company health plans. Sue survived breast cancer, but she was out of work for more than a year, using up all her sick days and her vacation time. Her disability benefit paid less than 40% of her salary. In addition, they also had $35,000 of other expenses that were not covered by their health insurance. So, if they didn't have critical illness insurance, they would have been forced to withdraw money from their retirement savings, reducing their retirement income by 35%. So, ask yourself this. With cancer striking 1 out of every 3 people, does it make sense to risk your family's financial stability and lifestyle, as well as your retirement plans, to pay for expenses that are not covered by your health insurance? Or does it make more sense to add a critical insurance policy to your insurance portfolio and help prevent the chances of an unexpected health event draining the assets you worked so hard for?